This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on July 23rd, 2015. Our radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. We also have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find us there. We're on your portable device. We go anywhere you do. You can subscribe to the podcast. Shows come in automatically. If you ever miss a show, they are streaming live on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. Right now, we are in a very confusing world financially and geopolitically. And if you would like to speak with Harold Siegel, he's getting a lot of calls from people, because a lot of the predictions that he's been making here recently have been coming true, with gold going down. Harold has talked about it going to 1,000. People are phoning and asking Harold's opinion on what to do. If you would like to speak with Harold personally and privately about your financial situation and learn more about investing in hard assets, diamonds, gold, and silver, call Harold at 1-800-432-1022, 1-800-432-1022. Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. Our featured diamond of the week from rarecoloreddiamonds.com is a .49 carat, radiant cut, fancy, vivid, purplish pink argyle. It is a stunning diamond. Take a look at it at rarecoloreddiamonds.com. Click on Featured Diamond of the Week. And what a week it was in the commodity complex. At the very beginning of the week, we had a major pullback in gold that Harold had been predicting. Now, some people say it was due to technical reasons, fundamental reasons. Then on the other side of the coin, you have people saying it was just out-and-out massive manipulation. In fact, John Embry from Sprout Asset Management said, when the market was open in the Far East at the beginning of the week, $2.7 billion worth of paper contracts were sold in 2 minutes. Not surprisingly, the gold price dropped almost $50 instantaneously. When you sell 30% of annual mine production in 2 minutes, it tends to have a rather dramatic price impact. Also this week, China came out and announced how much gold they have. And people don't believe it for a minute. They are under the opinion that China has way, way more gold than they're actually admitting to. They say they have 1,658 tons. And Egon von Greyer said, I don't believe it. The secrecy still prevails in the official gold-holding world among central banks. It seems that not one central bank will declare their true official holdings, whether it's higher or lower. It's inconceivable that China only has 1,658 tons of gold when we know they have been buying up to 2,000 tons of gold each year for the last few years. And before we get to Harold's commentary, a great quote from John Embry again. He says, I will reiterate to investors, you have to be extremely careful here. Financial assets are very overvalued and are being held aloft by constant official interference. This is ultimately extremely unhealthy and undermines the true nature of capitalism, but more importantly, it leaves the world on the edge of a total collapse when the situation reverses. But Harold, you were correct in telling our radio listeners that the commodity complex, including gold and silver, platinum and palladium, would pull back, and we saw a major dump, and obviously there's different arguments on either side why it happened, but we saw a major pullback in gold at the beginning of the week.
We certainly did. And again, when predicting that the price of gold was going to go lower, it was primarily due to the strength of the U.S. dollar. And that was another reason. If you saw what happened on earlier part of the week when gold did drop by $50, it actually broke 1,100 and went to initial support, which is 1090, which is where the market basically is at this particular point. It didn't break down as much as it should have. And with that amount of paper gold sold, and a lot of it they felt was from China because they had to raise money to support the stock market they were manipulating, it's really a ridiculous situation. And the fact that it's so obvious, I'm absolutely shocked that people are actually investing in that market. I mean, when you look at the fact that what China actually did, when their market dropped by 30%, it should have dropped by 30%. The fact is that there's just like the stock market in the United States at 18,000, it's not reflective of the economy. 18,000 is not reflective of the U.S. economy, and the Chinese stock market was nowhere near reflective of their economy. So basically, when the market fell by 30%, and it was mostly because of speculation and high leverage, the market plummeted 30% in 2 weeks. That caused margin calls like you've never seen before. Meant that people had to scramble to get money together. They sold anything that they could to raise money so they didn't lose their stock position. That's why we predicted that gold was going to sell off at that point, because I think a lot of the smaller investors just had to raise whatever money they could, and gold is that type of asset. It could be sold within seconds. But the frightening part about that whole situation was that the Chinese government halted all selling of hedge funds and mutual funds. Totally illegal. How in the world, if you've got a market that's plummeting, do you stop people from trading, from selling out? So that's where I have the major problem with that market, and I've seen it happen in the U.S. markets also. It's happened a few times. So, the fact is that as much gold that was dumped in the market paper-wise, the fact is gold should have dropped over $100 in that first few minutes, but it held on, only fell $50, but I'm still pretty positive, based on technicals, that the market is going to hit the price that we recommended, which is right around $1,000. So today, as we're taping the show on Thursday, the market's up $2.20. We've seen a low of 1093. So when I say the support for gold is at 1090, that's a fairly substantial stop level, but I'm positive that that level is going to be broken. So at 1090, we get two closes above 1090, and that market continues to fall all the way down to 1,000. The major reason, though, understand the major reason for that is primarily because of the strength of the U.S. dollar. There's a direct correlation between the U.S. dollar and gold. When the U.S. dollar is extremely strong, gold goes down. And that's exactly what the case is. Back in 1999, when I first recommended gold to you, the U.S. dollar was the strongest currency, and gold was at $250. So there's the direct correlation I'm talking about. A very strong U.S. dollar at 107, 108, and gold at $250, and nobody's buying it. But then we saw changes coming in the market, and all of a sudden the currency market started to change. And when the U.S. dollar started to weaken, that's when gold started to take off. And people thought we were crazy at that point, saying that gold was going to hit, $500, $1,000, $1,500, $2,000. And that's exactly what happened. Gold rallied as the U.S. dollar continued to drop, and the U.S. dollar dropped from the 106, 107 level all the way down to 72.5 cents. And that happened in 2011 when we hit $1,920 in gold. So there's a direct correlation. So as long as the U.S. dollar is strong, and let's face it, the U.S. economy is not great, but it's better than most other economies. So at this particular point, we're looking at gold is trading right at around 1090. That's a heavy support level. Next level is 1050, 10 and a quarter, and then we're looking at $1,000 gold, and I'm very comfortable at those levels. In the last 30 days, gold has dropped over $81, almost $82. In the last 365 days, gold is down $207.80, down a whopping 16%. So again, most of that is due to the fact that there is a direct correlation between the U.S. dollar and gold, and as the U.S. dollar continues to strengthen, and it will, gold will continue to fall. Now, what I do anticipate is a massive rally in the U.S. dollar coming. So at this particular point, we're back up to almost 98 cents in the U.S. dollar, 98 cents from 72.5 cents. If you do the math on that, that's why gold is sitting where it is. Also, what you saw this week is that gold sold off heavier than silver did, because silver is getting very close to its bottom. As we think the gold is going to hit 1,000, we do believe the silver will get to about $12.50, and I think that that's basically where we're going to see the lows of this market. Now, in the last few minutes, as I've been giving my analogy, gold that was up 220 is now only up 60 cents, and now we're talking that silver's just dropped negative for the day. The other thing is that we really have to be concerned about, and which is very confusing, is the Canadian dollar. The fact is that for many, many years, as we were trading, the Canadian dollar and the U.S. dollar were pretty well at par. In fact, the Canadian dollar was ahead of the U.S. dollar for a short stint of time. Now we're looking at a situation where the Canadian dollar is down 30%. 30%. And that's a very dangerous situation because Canada and the United States are trading partners. We're friends. Why in the world the Canadian government would let their dollar fall apart like that? It's absolutely incredible to see that this is happening. And by the way, it's not over. I believe that the Canadian dollar is going down to 60 to 65 cents. That's going to push the U.S. dollar up to around 107 in that area. It's a big currency play. A lot of my clients got involved in the currency play with me and made a tremendous amount of money, but the most is yet to come because we're still sitting at just below 98 cents. We've got probably another 8 to 10 cent move in the U.S. dollar on the upside, and there's a lot of money to be made on that. Now, again, myself personally, where I've been in the commodity business for over 30 years, and I think I know the commodity business very well, my specialty was always trading in currencies, precious metals, and oil. And the fact is that I feel very strongly that we're going to see a very strong U.S. dollar as soon as we get above the par level in the U.S. dollar, which is coming, believe me, and it's going to come fairly quickly. This move in the U.S. dollar is going to catch a lot of people by surprise. So the fact is that once we break par, there's buy orders above the par level on the U.S. dollar, which is going to send it sailing, as all other currencies are going to continue to fall. The only strong currencies at this point, and they're nowhere near as strong as they used to be, is the British pound, the euro, and the Swiss franc. Now, we know that the euro is going to continue to fall. The euro is probably going to drop to around par, and the U.S. dollar is going to be worth more than the euro is going to be worth. So that's a very big move in the currency markets. So again, at this particular point, I'm comfortable with the way that the market is trading. With all the hoopla and everything going on around the world, I look at things in a very distinct manner. And basically, the way I see things, with all the manipulation and everything, the market is still doing what it's supposed to do. The correlation between the U.S. dollar and gold is real, and that's something that I've always traded on, and it's something that has always made me money in the market. So, again, at this particular point, my suggestion is to remain very conservative. If you're confused and you don't know what to do, and you're a listener to the radio show, give us a call. There's no egos here. I'm exactly the same as you guys. All I want is for the listeners to my show, our loyal listeners and clients and friends, not to make the wrong move. And it's very easy to do so at this particular point. You can get emotional and frustrated about your investments at this time, and just imagine the frustration that's coming when the Dow plummets. If the Chinese market fell as much as it did, believe me, the Dow should have been down a couple thousand points based on that, and it isn't. The fact is that as manipulated as the Chinese stock market is, that's how manipulated the U.S. stock market is. In fact, most markets are manipulated at this point because governments are so frantic and so desperate at this point here that they just don't care anymore. They just want to keep their economies going. They just want to stay alive till something positive happens. And believe me, it's happening all over the world. In the United States, it's happening in Illinois, and it's happening in California, and it's also happening in Puerto Rico. I don't see how Puerto Rico's ever going to get out of that trouble. Then you've got the situation in Greece. They may have kicked the can down the road, but nothing has changed. The Greek people, as wonderful as they are, they're just not hard workers. When you take a 2-month vacation and you're not working seriously, your economy is going to do what it's doing right now. And the bottom line is that Greece is in big trouble. And Greece is not the largest economy. On its own, it's not going to cause any major problem. It's the domino effect that's going to come as a result of it, because there's other countries that are on the verge of going through what poor Greece is going through right now. So, again, when I talk about currency changes, the first time I brought up investing in diamonds, people, again, were unfamiliar with why diamonds, how they fit into the investment scheme of things type of thing. And I've always said that diamonds, rare diamonds, are a hedge against a bad currency, against a depleting currency. And look what we're going through now. I mean, just in Canada alone, my Canadian clients, forget about the appreciation on diamonds. The currency alone over the last couple of years has made our diamonds worth 30% more and soon 40% more just because of the currency. So the currency market is the most important thing. And the fact is that it's a market that I've traded for over 30 years. So please, if you're confused about what the markets are doing, if you don't know what to do with your own personal investments, I'm not trying to convince you to buy anything. All I'm trying to do is to let you know what's happening in the world today and what your financial options are. But you're going to find that most of my advice is going to be extremely conservative, not to leverage, not to finance, not to speculate or anything like that. So the fact is that we're at a time where one mistake could wipe you out, and that's why we want to make certain that the listeners to our show are all on the same plane, and we're not going to make any mistakes here. So, again, I'm very confident in which way the markets are going. I think that we're going to see $1,000 in gold. I think we're going to see $1,250 in silver. I think that we're looking at the Iranian situation right now and saying, how in the world is the U.S. bullish on this deal with Iran when the Ayatollah Khamenei and they're rioting in the street and saying death to America and death to Israel? Nothing has changed there. But the fact is, if they do get that deal done, they're going to take off some of the sanctions, and they're going to dump a lot of oil on the market. And that's going to push down not only the price of oil, but it's also going to push down further the Canadian dollar. So all these things you have to know before you make a decision. That's why Randy puts out the newsletter each week. He works so hard on that newsletter. It's one of the great newsletters out there, and it's totally free of charge. We don't make money off our listeners. We don't charge for the radio show. We don't charge for newsletters or advice or anything like that. In actual fact, our gold is almost ready to start to sell. We're just waiting again for the U.S. government to give us our license. But at that particular point, we're going to be able to sell gold to our clients at spot price with no commission. So, again, that's what Randy and I are about. That's what the show is about. It's been on for 15 years now. And all we've done is given great advice. Gold from $250 to $1,900, silver from $4 up to $50. We caught the $150 run in oil. We made fortunes in the currency markets, and now we've been calling for the last few months the downside of gold, and gold has dropped substantially, exactly like we said was going to happen. So please, if you're unsure of what to do, doesn't matter how much money you're investing or how much you have. You're our client, you're our listener, and we're here to help you. So, again, Randy, great job on the newsletter this week. It's just very, very loaded with great information.
Yes, and if you would like to receive our free weekly newsletter, speak with Harold, personally and privately, 1-800-432-1022, or connect with him at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week is a .49 carat radiant cut, fancy, vivid, purplish pink argyle. You can see it online, featured diamond of the week at rarecoloreddiamonds.com. We have a picture of the diamond in our free weekly newsletter. We have in our newsletter charts of the week, quotes, quick hits, info on gold, silver, and diamonds. And in our quote section, we have a quote from Gerald Salente, who is a market watcher and forecaster. He says, there is no recovery, and at some point, this global Ponzi scheme is going to collapse. We just saw it with China. The Chinese just pumped over $200 billion to prop up their failing markets. And actually, we have a story in our newsletter. They actually believe other sources, $458 billion. And even with the Shanghai index going up or even flatlining after putting that kind of money in. So the attempts to prop up the global Ponzi scheme are no longer working. This is why I've always said that gold is for my golden years. I'm not a trader of gold. I'm a long-term holder. The bottom line is I believe the gold market has now seen the worst. Could it go a bit lower? Yes. But compared to an upside potential of well over 2,000, the downside risk is low. Stephen Lieb, he commented on the situation with China announcing how much gold they have. They announced they had 1,658 tons. Most experts do not believe it. Lieb said, I would be very surprised if the Chinese don't have more gold and possibly significantly more gold than the United States claims it possesses, which is 8,100 tons. I certainly would not be surprised if the Chinese have 15,000 tons of gold. But they're saying we don't have any gold. What are you guys worried about? In that sense, it was a brilliant move from China. Think of the leverage China has if the 15,000 tons figure is correct and gold could potentially somewhere down the line go up to 10,000. What kind of wealth effect is that going to create for China? It's unbelievable. The bottom line is the West shouldn't play chess against China, especially if monetary hegemony is at stake. If the West does not get a wake-up call, the Chinese are going to have complete control over the East and the West. And I believe all the commodities eventually are going to fly. There's not a sector on this earth that people have been more bearish towards than commodities. So he's very bullish in the long term on virtually every commodity. Also, Andrew Maguire, and he's a bullion expert out of England, said, why would the Chinese show their hand? This announcement that they're only holding 1,658 tons of gold is ludicrous. Read the book, The Art of War. They have accumulated thousands of tons of gold since 2009. And a very interesting point this week from Richard Russell, Harold. This is the first time in my 65 years of writing about the stock market that I have seen investors waiting for economic evidence in order to gauge the direction of the stock market. Normally, the stock market will tell us the future direction of the economy. But this time, investors are waiting for the economy to tell the future direction of the stock market. And Richard Russell says that is obviously very unparalleled in the times that we live in. Harold, we have about 2 minutes left in our segment, but China coming out saying how much gold they have. We had that major drop of gold at the beginning of the week. Over the summer and leading into the fall, it will be interesting to see exactly where this gold market goes.
You better believe it. Well, again, I think we have a good handle on it over the shorter term, and then we do look for a major upside move in the market as governments get so frustrated that they can't continue to do what they're doing. So again, I'm still very bullish long-term on gold, and let's not lose sight of the fact that gold below $1,100 is below production cost levels, and silver below $16 is below production cost levels. So how long are the mines going to continue to produce gold and silver at a loss? Not for much longer. So the fact is that I anticipate that and one other thing is that the demand for gold and silver, especially for silver in the minting of coins from the U.S. and the Canadian mints, they both admitted they cannot get enough physical silver to mint their very profitable coin program. So how in the world does the market fall when there's a shortage of a physical commodity? In any other time, this would be an impossibility. Not in the times we live in now. And if that doesn't paint the entire picture, I really don't know what does. If there's a big demand and there's no supply, the prices always go up, except for gold and silver. It's a crazy thing. Call me if you need any advice on how to trade these crazy markets.
Connect with Harold at 1-800-432-1022, 1-800-432-1022. Anything you discuss is obviously 100% confidential, private. Connect with Harold at rarecoloreddiamonds.com. Our featured diamond of the week is a .49 carat radiant cut, fancy, vivid, purplish pink argyle. You can see it at rarecoloreddiamonds.com. Click on featured diamond of the week. The video is there. We'll talk more about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping on July 23rd, 2015. Our time is 9:05 Mountain. Radio show runs on your favorite radio station, 6:30 CHED in Edmonton, 3 o'clock in the afternoon on Sunday. We have a podcast through iTunes. Type in the World Financial Report on Radio. You can subscribe to the podcast. The shows will come in automatically. You can go there and put them on your portable device. Wherever you travel, we are there with you. We also have the shows streaming live, archived on Harold's 2 websites. If you ever miss a show, HESradio.com, rarecoloreddiamonds.com. And Harold mentioned during the past few shows, and really this is a real critical show today due to the fact of what's happening in the commodity complex. Pullbacks in almost everything. I think sugar was one of the few things that actually gained during the week. But connect with Harold. If you're very confused about the world financially and geopolitically, not sure what to do, you can speak with Harold personally, privately, confidentially, 1-800-432-1022. You can call Harold and speak with him, 1-800-432-1022. and connect with him at rarecoloreddiamonds.com. Our featured diamond of the week it's a beauty. It's a .49 carat radiant cut, fancy, vivid, purplish pink argyle. And we, in the first 3-4 months of the year, have all the auctions. And we have auction results from different auctions, from Sotheby's and Christie's. And what we always find, the vivid purplish pink argyles, they go for great prices at auction. If you would like to see some auction prices, we can send them out to you. All you need to do is connect with Harold at rarecoloreddiamonds.com. Jean-Marc Leberher, who's the managing director of Rio Tinto Diamonds, said the overall price for argyle pink diamonds has tripled since 2000. Richard Russell was quoted as saying, "Another high-class area of transportable tangibles is diamonds." He says you can have $10 million worth of diamonds in the cuff of your trousers. And also a quote from Eric Valdieu of Valdieu Fine Arts. People who had the money before but did not consider diamonds are coming into the picture. And this is a story that we've talked about before, but it really goes to tell you how the diamond market is over the long term. In 1980, the highest auction price paid for a diamond was $127,000 a carat for a 7.27 carat pink diamond. That record was shattered in 87 by the first high-quality red diamond to be sold at auction. It was a .95 carat Hancock red. It was sold for $926,000. And the Hancock red was sold by the heirs of the American owner Warren Hancock, a Montana rancher and diamond collector. Now, Mr. Hancock had bought all his diamonds at retail prices from his local jeweler, and he had reportedly paid $13,500 for the .95 carat red diamond in 1956. It's fair to say that this was one of the greatest gemstone investments of the century when it sold for $926,000 a carat. And Harold, that's one of the things that we've seen. In fact, to give you an idea, the Cartier Devant de Corsage brooch realized a staggering price of $17.5 million, a 660% increase, having first been sold for $2.5 million at Christie's back in 1991. Also in 2003, there was a 50-carat D Flawless for $50,000 a carat, and back in June of 2013, they sold, and this is through Christie's, they sold a carat, a D Flawless, for $170,000 a carat. That's 3 times the price. So you can see that obviously over the long term, if people are buying and holding the diamonds for the long term, there is incredible price appreciation that can happen if you get the right investment diamonds.
You better believe it, Randy. And, the thing is that if you look back in 1980, the highest auction price paid for a diamond was $127,000 a carat for 727 pink. Do you realize that diamond sold for under $1 million, and that diamond today is worth $10 million? As far as the Hancock red, I remember that, and I know everything about that particular diamond. And the fact is that he paid, again, under $15,000. He paid $13,500 for the diamond. I know his wife chastised him for buying it. But when he passed away in 1986, I believe it was, that diamond sold for $926,000 a carat. But the big thing is today, that diamond is worth over $4 million. So when you look at how much that diamond has gone up from $13,500 all the way back into 1956, but again, I've said on the show before, there's so many stories about diamonds that have increased in value substantially. The one thing about investing in diamonds, it's not a short-term investment. The longer you hold it, the more it goes up. You don't want to buy a diamond and hold on to it for under 5 years. You're just not going to make any money. It's not that type of investment. You're not going to lose your money. You're just not going to make the money that you should be making. I've talked a lot about my wife's girlfriend, Lynn, who inherited a diamond from her grandmother, a 5-carat pink, and she bought it 50 years ago for $50,000. It's now worth $5 million. So again, a lot of my clients that buy diamonds don't intend on cashing them in for themselves. They have children, they have grandchildren, they have great-grandchildren. That's when these diamonds take on a life of their own. Just imagine how much Argyle pink diamonds are going to be worth when the mine closes down. We talk about supply and demand and all that type of thing. Well, that's very present in the pink diamond market right now. The demand for pink diamonds throughout the world is the highest it's ever been. The amount of pink diamonds is the lowest it's ever been. So the prices are skyrocketing, and they will continue to do so because for those of you that don't know, that are new to the show, the Argyle mine in Western Australia produces 95% of the pink diamonds in the world. It's only about 200 carats a year. You're talking a tiny little number. In fact, at the Argyle tender this year, there was what, Randy, 44 carats of diamonds?
That's right, 44, 65 diamonds.
So you're talking about the demand for pink diamonds is the highest it's ever been. The supplies are the lowest that they've ever been. And as they're saying out of Australia, Rio Tinto, that since 2000, prices have tripled. Tripled. Do you know any other investment out there where the asset has tripled in the last 15 years and there's no risk to the market because they're not going to find another pink diamond mine. If by some slim chance they ever did, it takes 10 to 15 years for that mine to come online before they can start producing. The diamond that we're showing today, the vivid pink, is spectacular for several reasons. Number one, it's an Argyle. It's a numbered piece. Number two, the size of it. 95% of all Argyle pink diamonds are under a quarter carat, with a lot of them being under 0.15s. They're minuscule. This is the type of diamond that they would show at the Argyle tender because it's about a half a carat. The vivid purplish pink color is one of the best colors you could possibly get because the stronger the saturation, the more valuable a color diamond is, and vivid is the strongest saturation of any colored diamond. And then it's got a good clarity of an SI2, which the fact is that most Argyles are actually graded on their color. The clarity is not as important, but when you do get a clarity, it increases the value. So this is a very, very valuable diamond. This is a diamond that I anticipate over the next 10 years can increase 500, 600, 800, 1,000%. These are the best diamonds you can get. They're portable private wealth. They could be sold in other currencies. Living in Canada, and I'm a Canadian, born and raised in Canada and lived, half of my life there. I now live in the United States, but, most of my business and most of my family is still in Canada, and I'm love everything Canadian. But the fact is that many of my Canadian clients have been buying diamonds for many, many years. We've invested in these Argyle pinks, and where they've increased in value substantially, again, the currency has gone up 30%. So the other thing is that living in North America, where we're looking at things that are happening in Europe and Venezuela, for example, where an iPhone today costs $50,000 and a loaf of bread costs $200, that's what we talk about currency devaluation. The governments have done things since 2008 that have been so severe, so underhanded and illegal, and are going to end up coming back and hurting everybody. Because the fact is you can suppress a market for as long as you possibly can, but eventually that market's going to do what it's supposed to do. And the fact that these markets are being manipulated, China's stocks and U.S. stocks, and we know all these banks that have been charged with violating the currency markets and the metals markets and being fined for them and all that, but that's what's going on in the world today. So the fact is that you don't know when you're going to wake up in the morning like the good people of Greece or Venezuela or Russia or whatever and find out that your currency is worth a fraction of what it used to be. And again, being Canadians, we know that going into the United States right now, where our currency used to be even, it's not anymore. It's down 30%. That means that if you come to the United States and you want $1,000 in U.S. dollars, it's going to cost you 1,300 Canadian, soon 1,400. So the fact is that to own a diamond where it could be sold in other currencies is vital. It's one of the most important things because we don't know what the world is going to respond to these currency devaluations and actual countries going out of business. So a diamond like this, a diamond, and you don't have to be a multimillionaire to invest in the diamond market. In fact, most of my clients aren't. Most of my clients are hardworking, everyday people that just want a fair chance. They want to own an asset that's not going to fall apart like 30% in 2 weeks like a Chinese stock market or gold dropping, as much as it has this year, and how all the markets are actually manipulated. That doesn't happen in the diamond market. This is a real asset, an asset that if the good people of Greece owned a diamond and they couldn't get to their bank for 2 weeks because the banks were closed, they could have gone across the border to Germany or to Switzerland or even to England and sold that diamond. Whether they made money or not, they have an asset that could be turned into instant cash. And that's why this is so important. Number one, the Argyle Pinks is probably the best investment you can make today. We're never going to get another chance to do this again. There will never be another mine in existence that produces 95% of the pink diamonds in the world or the blue diamonds. This will never happen again. So if you're in the stock market, my prediction is you're going to lose your money. Just like in 2008, the market's going to crumble. And then you're going to sit back for 5 or 6 years and hope that you can get back to break even. It doesn't matter what the name of the investment is. It's what's going to give you the biggest return with the least amount of risk. And there is no doubt in my mind that at this particular point, it's Argyle Pink Diamonds. Yellow flawless diamonds, they give you a 15 to 20% return a year depending on how saturated the color is. Blue diamonds have gone up over 1,000%. Red diamonds have skyrocketed. Is pink diamonds now. The pink diamond trade, this trade in pink diamonds, is something that if you're not involved in, you will regret this for the rest of your life because you knew about it because we've mentioned it for the last 10 years. That's how important this particular trade is. It's like going and playing the lottery every single week and buying the same number every single week. And the 1 week that you don't buy that lottery and play those numbers and your number comes up, you will never ever be able to live that down or think or forget about it. And that's exactly what this situation is in the pink diamond market. This is an opportunity that I first saw 10 years ago and brought it to the attention of the diamond world. We're the only company that does this to the level that we do it. We've had other imitators, companies that try to copy what we do, but we are the largest dealer of Argyle Pinks in the world. We're the largest seller and cutter of yellow flawless diamonds in the world. We're the largest cutter and seller of green diamonds in the world. We also mine our own diamonds. We're third generation miners, cutters, and polishers. So, and one other major thing is that we're the only company that has an exit strategy for our clients. We own 8 Siegel Fine Auctions, which is the live virtual auction business that will resell our diamonds, our clients' diamonds down the road, and we only take a 10% commission on the profit only. So if you don't make any money, we don't make any money. If you look at Christie's and Sotheby's, they charge 25% on each end. We charge 10% of the profit. So again, Randy, I'm just ecstatic about what's happening in the diamond market because it offsets everything negative that's happening in almost every other market in the world. This is an investment that I want to see my clients in because, again, over the longer term, the next 10 years, 8 to 10 years, I believe my clients are going to make anywhere from 300 to 1,000% return on their pink diamonds, depending on which diamonds they own. The best investment out there right now is the pink diamond market, the yellow flawless diamond market, and it will soon be gold, and we're going to bring that to you also at spot price with no commissions. There's nobody out there that does what we do, and we only want our clients to make money.
Featured diamond of the week is a .49 carat, radiant cut, fancy, vivid, purplish pink Argyle. Speak with Harold about investing in this diamond at rarecoloreddiamonds.com or call 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com. In 1960, there was a diamond called the Princey diamond. It sold for 46,000 pounds. That was $70,000 roughly American at Sotheby's in London. The buyer was Van Cleef and Arpels, and they threw a party. And there was a young boy there who was 14 years old, and his mother was a high-level top person, and his nickname was Princey. So they named the diamond the Princey after the youth. In April 2013, now remember, it was purchased for $70,000 U.S. It sold for $39.3 million at Christie's in New York. And to reiterate that quote we mentioned earlier, Rao Katika, he's head of the jewelry department at Christie's. He said in 2000 we would sell a 50-carat D flawless for $50,000 a carat. June 2013 we sold a 26-carat D flawless for $170,000 a carat. That's 3 times the price. And colored diamonds are making 10 times the prices on 10 years ago. One of the things that happened, and we have it in our newsletter just as a reminder, in the first half of the year, we had two engagements of pop stars. One, Nicki Minaj, who is currently in a Twitter battle with Taylor Swift, and Iggy Azalea. Now, they were given engagement rings by their fiancés, and Nicki Minaj, she got a 15-carat fancy yellow hard modified brilliant cut mounted in platinum with a double halo of white pave diamonds around it. The retail price was approximately $500,000. And the quote that came from the jewelry store in Los Angeles that sold it to them, they added, it looks like that naturally fancy colored diamonds, the trend is continuing full steam ahead. It's a beautiful heart-shaped diamond. You can see a picture of it in our newsletter. Now, Iggy Azalea, she got a $500,000 engagement ring from her fiancé, and it was a 10.43 carat engagement ring. The ring featured an 8.15 carat fancy intense yellow cushion cut with 2.28 carats of white diamonds set in 18 karat gold, white gold. The value on that, $500,000. We have a picture of that engagement ring as well. And Harold, we see at auction in the first 5-6 months of the year with Christie's and Sotheby's at auction, the main diamonds that we're selling at auction, pink diamonds, yellow diamonds, and we're seeing that trend in engagement rings in top-flight pop stars, and it wouldn't surprise me to see in the future more of that to come, because people are realizing if you're going to make an investment in a diamond, when it comes to an engagement, why not have it be something that can appreciate in value at the same time? And the diamonds that we're talking about, those two yellow diamonds, we know that in time they're going to be worth a lot more than $500,000, Harold.
Oh, you better believe it. In fact, the ring that I gave to my wife, the 14-karat yellow flawless that Harry Winston made into a setting for her, that diamond has tripled in the last 6 years. So when you get into those type of diamonds, again, 1-carat flawless yellow diamonds in around the $20,000 range. Back in 1980, you could have bought one for $500, and there's very, very few of them available. Very few jewelers will ever see a flawless yellow diamond. When you start getting into the 2 carats, only one diamond in 15 million is over 2 carats, and I can assure you very few of them are yellow flawless diamonds. There's not many of those that exist. When you start getting into the larger ones, the 5-carat yellows, now you're talking about something of size and something that, again, can take on a life of their own. You get into these 10, 15, 20-carat diamonds, man, you've never seen price appreciation like you've seen on those type of diamonds. So, the fact is that the rare color diamond market is an amazing market, and we're going to see that that's going to be a primary market for us moving forward because there's so much risk in other markets. Again, we're seeing it every day. Currency devaluation can kill you. It can take away all of your money, and that's what it's doing to people. The good people of Greece have lost all of their money, and those that haven't gotten out of the euro at this point here or moved their money offshore are going to lose probably 2/3 of their net worth when they go back to their old currency. So, again, diamonds, rare color diamonds, the ones that we offer to our clients, they start at 20,000. They go up as high as 40 to 50 million. The majority of my clients that buy diamonds under 250,000. I have many clients that own diamonds in the 20, 30, 50, 100,000 range. And believe me, they have no problem sleeping at night, especially with what's happening in the commodity and stock markets, which can take away all of your money. Give us a call. Let me explain to you why certain diamonds will help you get to where you need to go financially, especially for retirement. And we have other great investment opportunities that are very, very conservative that pay out high returns. So, again, we made a fortune in the currency markets over the last few years, and the biggest moves are coming right now. The U.S. dollar is going to skyrocket above par to 107, 108, the highs that we saw back in the 90s. And, again, putting that into proper perspective, back in the 90s when the U.S. dollar hit 107, 108, gold was at 250. This time when the U.S. dollar hits 107, 108, the U.S. Gold's going to be at 1,000, 4 times as high. That's why I'm saying that when gold does start to move again on the upside, which is going to happen, you could see gold go to 4,000 to 5,000. So please keep in very close touch with me. I want to talk to you. I want to spend as much time as you need to explain what you may need to do and let you know what your options are moving forward. We're in very, very dangerous times. Randy and I want to make certain that the listeners to our show do well during this current situation.
Speak personally and privately with Harold at 1-800-432-1022, 1-800-432-1022. Connect with him at rarecoloreddiamonds.com. Featured Diamond of the Week, a .49 carat radiant cut, fancy, vivid, purplish pink argyle. And as we have the quote from Jean-Marc Leberher, Managing Director of Rio Tinto, the overall price for argyle pink diamonds has tripled since 2000. And two diamonds, actually a little bit of info for you. RareColoredDiamonds.com and Diamante Atelier, they actually had people invest this year, and these are Harold's companies, this year in a 1.55 fancy deep green diamond and a .66 marquee fancy intense orange diamond. And as well, there was an argyle pink diamond necklace and ring that was valued at close to $900,000 that was sold by Rare Colored Diamonds and Diamante Atelier. And at times, and this is 100% confidential, there are times where Harold has people investing in diamonds. He can't even talk about it because it is kept 100% private and confidential. That's the same as your conversations with Harold when you call him, 1-800-432-1022, or connect with Harold at rarecoloreddiamonds.com. We have the Diamante Atelier catalog collection for 2015. If you would like to see it, we can send it out to you. We also have an article you can read. It's from Bain & Company. They did a report on the world of diamonds. It's called Timeless Gems in a Changing World, and it really goes to show that no new mines coming on, more increased investment and buying of diamonds in the Far East, which is a positive for the diamond market. Harold has been interviewed by Bloomberg on numerous occasions and Fox Business, also the Jerry Bovino Show. If you would like to see those interviews, we'll be happy to send them out to you. You can find them in our free weekly newsletter. But Harold, we have about 3 minutes left here in our segment. You've been interviewed by Bloomberg, as well Fox Business, Jerry Bovino Show. You've had some tremendous sales this year, and the truth is, there are times you have people investing, and it's 100% confidential. We just can't talk about it. We'd love to, because people would literally be shocked at what's going on. But, at times it's 100% confidential.
Well, in a lot of cases, because, again, you're talking very substantial diamonds. You have no idea what goes on in making a sale of a large diamond, the secrecy involved in it. One from the cutter that owns the actual diamond, he's very protective of that diamond, and two, the buyer doesn't necessarily want the information to leak out. So it's a process for sure, and when we can, we try to put out press releases for our clients that will help increase the value and awareness of that diamond, and we've done that many times. We have that wherewithal in which to do so. As far as getting on the major news stations, it's them to contact us, and I'm very privileged, to be to where we are in the diamond business. We really started in the investment aspect and H. Siegel Fine Auctions, and moving forward, that's going to be one of our most substantial businesses is the auction business. Right now, it's a business we're developing. As we get more and more clients and as things change around the world, you're going to find that a lot of our clients right now are European clients because they're so concerned about what's happening in Europe with the euro. So all in all, just very pleased with what's happening in the diamond business. Again, you can get involved for as little as $20,000, but that $20,000 in 10 years from now could double your investment with no risk, and there's very, very few other options that could do that for you.
As Harold said off the top of the show, connect with him personally and privately. He'll be happy to explain to you what's happening in the financial markets. Obviously, you have markets plunging and people wondering what to do financially. Also on the geopolitical side of things, connect with Harold at 1-800-432-1022. Speak with Harold about our featured diamond, a .49 carat, radiant cut, fancy, vivid, purplish pink argyle. You can see it at rarecoloreddiamonds.com, featured diamond of the week. Thank you very much, Harold Siegel, for another great show.
It's my pleasure, Andy. I wish everybody a wonderful weekend and a very profitable day.
That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.